Good day everyone, this is Ma'am Aduko and today we're starting our new tutorial video for accounting. We all know that accounting is vital to the success of every business in a way that accounting helps to quantify data for easier interpretation. And accounting is applied to our daily lives, like how we make our budget, count our change, check the receipt from the market, manage our savings, and etc. Actually, accounting encompasses everything in our daily lives. And also, we are surrounded by businesses, from managing our own money to seeing profit and loss statement of big corporation. And where there is business, there you can find accounting. This tutorial video is for you, my dear students, to assess your learning in accounting. Our lesson objectives are: define accounting, describe the nature of accounting, explain the function of accounting in business, narrate the history or origin of accounting, and the last is you will be able to cite specific examples in which accounting is used in making decisions. The American Institute of Certified Public Accountants defined accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money, transactions, and events which are in part at least of a financial character, and interpreting the results thereof. Let us study the statements of AICPA to gain more understanding of the definition of accounting. Here a concept map for us to use in order for us to be able to understand more on the definition of accounting. So according to the definition of AICPA, accounting is the art. Okay, so accounting is the art. Why AICPA considered accounting as the art? It is considered as the art for it requires the use of skills, techniques, creative judgment, and one has to be trained in this discipline to be able to perform accounting efficiently. Okay, so accounting is the art of what? Accounting is the art of recording, classifying, and summarizing. Accounting involves interconnected phases. Okay, so from recording, the next phase is classifying, and then after classifying, the next phase is summarizing. Okay, so what do you mean by recording? So recording pertains to writing down or keeping up business transactions, like for example payments to the suppliers. So payments to the suppliers is a relevant economic event, and this will be recorded in the so-called accounting books. So after recording phase, the next phase is classifying. Okay, so classifying involves grouping similar items that had been recorded. Okay, like example, all cash transactions, all credit transactions. So it should be grouped into similar items. And then the last phase is summarizing. So once they are classified, information is summarized into reports, which we now call the financial statement. So accounting is the art of recording, classifying, and summarizing in a significant manner. So take note, significant manner. In other words, relevant, important manners. Okay, and in terms of money, transaction, and events which are in part at least of a financial character. So it must be significant, like example, okay, so the Toyota company, okay, so they are selling Toyota cars, of course, and then one buyer decide to purchase one of their cars. So the transaction or the events is significant or relevant because it will affect the company. Okay. And then in terms of money, what do you mean by money? Okay, money, cash or checks or anything in monetary figures. Transaction. Okay, so when we speak of transaction, it is the exchange of goods or service for a sum of money. Like there is value received and value parted with. Then economic events. This is a transfer of control of an economic source from one party to another. Okay, like my example a while ago. So once the Toyota company sold their cars to a particular buyer, so the buyer will be now the owner of the cars. Okay, so after recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and events, okay, so these are interpreted. Okay, so the results are interpreted, okay, into financial statements. Okay, so example of financial statements, income statements, balance sheets, statement of cash flow, statement of retained earnings. Okay, so these are an example of financial statements, and these statements, okay, should be interpreted by the different users of accounting information. So why it should be interpreted, the results? Because information will be useless if those information cannot be understood. The amounts, figures, and other data in the financial report will be useful to the users in terms of financial decision making. Okay, so example of financial decision making, like say they want to expand a business or they want to purchase an additional equipment or they want to produce a product or they want to buy this particular company or they want to invest into this particular company. So that is financial decision making. Okay, so they need financial statements. Okay, so who are those users of financial statements or accounting informations? The internal user and the external users. So these two users of accounting information will use financial statements in their financial decision making.